You suck at day trading. I'm gonna tell you exactly why. What is up, guys? AA Bands. We are back with another slight little mini video slash vlog. I do like doing these because they're kind of fun. They're pretty informative, and I mean, y'all like the last one. You feel me? We're about to get some wings, I think. Where should we go? Where should we go? I've actually never been to Wingstop. Okay, fuck it. We're gonna go get some chicken. We're just gonna go. We're just gonna drive. Fuck it, bro. Cause we gotta vlog. You suck in day trading because you don't think, bro. You are not using your fucking brain. And it's because you don't think, which is why you fucking suck in life. Not even trading, in life. You have to apply yourself. Okay, if you want to have success in this field, you need to apply yourself. But let me elaborate. What do I mean by you're not thinking? I might just say fucking and go to Crumble Cookies, bro. Fuck it. We gonna get Crumble Cookies, man. Fuck it. Guess what your both ain't shit. If you guys just recently saw, okay, there was a famous influencer. His name is Don Vo. He actually blew $1 million of live investor funding. Hold up, I'm gonna go autopilot on this. He blew $1 million in live investor funding in a MAM account. So what's a MAM account? So a multi-account management is when essentially, a lot of you guys in the trading space might not know this, but it's when there's a pool of money that's managed by a trader, a fund manager, an investor, whatever, but it's allocated by different investors. So for example, you could have, let's say, $1 million in the pot, right, which is like $1 million account, but 50K might be contributed by one guy here, another 100K might be contributed by another guy here, and basically the percentage gain that you make as profit on those accounts, they are proportionally distributed to each investor individually, but you're managing the full sum of money by yourself. Okay, so recently, this is going viral right now on the internet, on Twitter, in the trading space. Basically, Don Vo is a very famous influencer. He's about 100,000 followers on YouTube. But he trades very aggressively. So the way that he trades and his style of trading is very, very high risk, negative RR scalping. And why is this bad? And I preach this to you guys. And no matter what skill level you are, even if you're very, very advanced, you still should not trade like this, okay? And why is that? It's because when you are going for a 0.1 RR, what does this mean, okay? This means you are taking trades that go 10 pips in profit and you're letting trades run 100 pips negative, okay? I want you to answer this without any knowledge, without any prior understanding. Is this a good idea, bro? Would you give somebody money to trade like this? Because I as hell wouldn't. And the reality is, bro, is that his way of trading is so aggressive, bro, so aggressive. And you know, some people were saying that, oh, he was up like 50% on the account or whatever, but you know, regardless, it's just wrong what happened. And basically, he blew the account, whether it was through some means of using some HFT, high frequency trading bot, or manually, and he blew it, you know, 95% of the portfolio in one day. So all of his investors lost all his money. He lost $1 million in a day. And I had so many people DM me. They're like, bro, like, you know, I'm having suicidal thoughts. Like, this is just terrible. Like, what do I do? And this guy, like, you know, invested 54K into the MAM account. All right. So where am I going with this? So basically, he trades a negative RR, right? And it's just not a good way to trade, because being on, you know, the whole basis of scalping, right? Negative RR scalping is the idea that, hey, because your TP is a certain iteration smaller than, or a certain multiple smaller than 1-to-1, there's a higher likelihood, assuming price is random, that it should hit that TP over that SL level, right? So for example, if I have a 1-to-1 RR, there's a 50% chance that it hits TP, 50% chance it hits SL, right? If I have a 1 to 0.5 RR, there's a 2 times likely there's 2 times likely a chance that it hits my TP than my SL, because I'm taking the TP at half of the distance compared to the SL, right? And what do I mean by this, right? Taking it a step further, okay? This is not a good way to trade, but Don Vo has a cult community of meat riders who are like ride or die, right? None of these people will ever be able to trade like him profitably in that style, but they, you know, defend him till they die because they're NPCs. They don't think with their brain, okay? You guys on, you know, YouTube, you guys on this platform, on any, you know, platform in general. You guys are trying to look up to these gurus. You're trying to follow these gurus who are not giving you real advanced information. Right? They're not actually helping you. You're falling for their lifestyle. You're falling for their marketing. And while that's necessary to grow a trading brand or a brand in general, even like with me, right? Is their product a premium quality product, right? Do they have the results? Do they have the testimonials back behind that to show that they are verified? Do they have verified payouts? Do they have students who have payouts? Do they have a very high retention rate for their course or mentorship or whatever, right? And I've had so many people, you know, I'm not going to name names specifically, but there's so many people who are buying info products, right, who just do not have the actual, who are not getting the value, or that are not getting the value they think they're getting. And I had another guy message me. He bought another influencer's training or info product, and he basically did a chargeback on his credit card because it was, you know, he didn't like the quality, right? But my point is like, instead of focusing on working and learning real concepts from verified people in the space, right, and you are consuming yourself with garbage of trading content, you know, like these influencers are portraying to you, and because of that, you're not succeeding. You're not applying yourself. You're not focusing on what's actually necessary for you to become profitable. Because who fucking cares what all these influencers are doing? Who cares, you know, if this guy bought a Lambo, if this guy's in a Miami penthouse or doing whatever? How does that help you? It doesn't, right? Learning the skill set, learning the actual knowledge that's required based on the person's credentials is what's going to help you become a successful trader long term. And another big thing is that the ICT community, you know, huge cult following, right? You got to understand, trading is not as complicated as you think it is. It is really not, okay? There are only a handful of key concepts that you truly need to know to be profitable in trading. And obviously I talk about them in my mentorship, in my community and whatnot, but it's truly that simple, okay? You guys are trying to find so many complex interactions and drive, you know, all these crazy, you know, steps and just do all these unnecessary things, and you're getting, you know, information overload, right? And you have to stop that. Okay, you have to stick with a couple of principles, see how you like it, how it plays out for you, if you like that style, and if you don't like it in terms of the trading style because of your lifestyle, and if you don't like it because in terms of how the trading system or style aligns up with your own personal lifestyle and your job and whatnot, and then you switch, right? But I see so many ICT, SMC, you know, all these cultist kids, you know, with egos, man, just overcomplicating everything, doing all these crazy things, consequent encroachment, Reaper fair value gap, you know, PO3 candle, like all this crazy stuff, bro. You know, CISD, it's all fugazi, bro. It's all made up, okay? And you are doing yourself a disservice by continually consuming content that is superfluous, okay? It's arbitrary, it's just extra added random information, okay? Now, if you like consuming that content because it's entertainment to you, it's fun to watch that content, and you're just doing it for, you know, shits and giggles, absolutely. And you might already have a trading system, you might already understand this, then this is not for you. But this is for those people who literally turn off their brain on autopilot and they don't critically think, and they're not actually understanding what's truly preventing them from being profitable. And it's literally this simple, okay? This journey, guys, is you versus you, okay? Another good trader in the space, Daniel Chung, lots of verified payouts. I think he has his own prop firm, CK Capital, okay? He says this all the time. It is you versus you, okay? Stop focusing on everybody else's journey, what everybody else is doing, and focus on how you can benefit and grow your own journey, okay? Because let me tell you something, they're gonna leave you in the dust. You're gonna be they're working on their own craft themselves. They're working on their own channel, their own brand, and you're just gonna be used as a stepping stone, right? So lock the fuck in, bro. It's that simple. All right, continuing on. You need to understand what derives true profitable trading, okay? A great video I just saw, this guy talked about it. He basically, and I've known this for years since I started trading, right? I have a math background, I have an educated background, okay? But you would be surprised how many people embark on this journey without understanding basic statistics, basic theories, basic, probabilistic concepts that you need to have to be profitable, right? So a big thing is data collection. I cannot stress this enough to you guys. You need to collect data, bro, okay? You need to have an Excel sheet where you are recording very key metrics, okay? You are recording your RR, you're recording your win rate, you're recording your loss rate, you're recording your equity curve generation, and and you're able to list it in order based on, whatever metrics you're using to trade, okay? Okay, we'll just chill like this for now. There is a concept in trading called the law of large numbers. What does this mean? Okay, and in statistics, this is what it means. Okay, if I have a coin, okay, and I flip that coin 10 times, I'm not gonna get 50 heads, 50% heads, 50% tails. I might get 8 heads and 2 tails. But does that now mean that my probability of getting heads is 80% and my probability of getting tails is 20%? No, absolutely not. Okay? And what will happen is that the law of large numbers states is that as the sample size increases, okay, of a game system or a probability system, right? Slash chess, whatever you want to call it, okay? The true probability of an outcome will converge to a certain number, okay? That's all it means. I know that I stuttered a lot, but that's all it means, okay? How does this apply to trading? Okay, people think that they'll take 20 trades, okay, and now their system says that, oh, I have a 3 RR risk to reward, and now I have a 60% win rate. I'm gonna be rich. I'm gonna make so much money. No, 20 trades is absolutely nothing. Okay, it is absolutely nothing. Now, obviously, you have factors such as how many trades you're taking per day, the frame of the trades, right, in retrospect to the system itself, but people don't understand that you need to have at least 750 to 1,000 samples to give you an accurate understanding of what a trading system will do, right? Even more, obviously, the more the better, right? There's a guy on YouTube. His name is called Coding Jesus, right? He basically, I'm pretty sure he's a quant developer at a prime quant firm. Right, I think it's 2 Sigma or something. I don't think he actually discloses where he works. Have a lot of respect for him. He's very wrong on a lot of things, like for retail trading and whatnot. But he says, as an HFT bot, you need to have, the HFT bots at quant firms do, 5,000 trades in a day, And then, some guy came on his channel and was like, okay, well, I'm a discretionary trader, and I only take 2 days a year, two trades a year, or 2 to 5 trades a day, but my sample size is over my time period is over 4 years, okay? If you're taking 5,000 trades a day, obviously in respect to the actual frame of the system, taking 5,000 trades is nothing, right? You're gonna need, millions upon millions of samples to have an accurate understanding if you're taking 5,000 trades a day. But if you're taking, 3 trades a day, 4 trades a day, 2 trades a day, and you're just applying that over a very long time, you should still get results. That's my whole point. Okay? But I see so many people, they'll do a little bit of trading, they'll miscorrelate things. They'll think that, hey, just because this phenomenon and just because my system is playing out in this in these steps in this way at this time and it's showing these results, that means that it is now defined and now it's going to be like this forever. That is absolutely false, guys. my trading system, I have over 1,500 samples of my trading system, and I've calculated my metrics, okay? I can have about 40 losses in a row with my trading system. It's a low win rate system, more high RR, okay? But I can have 40 losses in a row with this trading system. But okay, if I didn't collect that data, if I only collected 200 samples of that data, of my system, I would have never known this, right? So this is why you need to use the idea of getting a large sample size, so the law of large numbers and confidence intervals will show that, hey, your system is profitable, okay? Number 2, this is called gambler's fallacy, and oh my god, bro, if you understand this, you're light years ahead of, you know, everybody else in terms of profitability, okay? What does the gambler fallacy state? The gambler's fallacy states that the probability of an event happening is not affected by the previous outcome of that event, okay? That probability is independent of previous events, okay? I don't even know if I can put it on here. There's some math formula. I took this class, I learned this a long time ago in statistics in college and whatnot. But why is this so important? Is because what will happen is that traders think that just because they have 3 winners in a row, they're going to have another winner in a row. Just because they have 3 losers in a row, now it's time for them to have another a winner now, okay? And that is absolutely far from the case, okay? A great trader said this on Twitter one time, and it's actually eye-opening. I completely agree with him, but he couldn't have said it better, okay? You can control the long-term outcome of a trading system or the results of trading, but you cannot control the orders of winners and losers, okay? And that is huge, okay? Because as a day trader, you have to go through the motions. You have to go through the process of executing these trades and taking them in real time, okay? So what will happen is that you might take three losers in a row, and now you're trying to cash the bottom, you're trying to cash the reversal, the market's dumping, you're trying to buy, and it just keeps dumping. You're like, oh, you know what, I'm gonna cash the reversal, the RSI is oversold, it has to go up now. I just had 3 losers in a row, it has to go up now. Little do you know, it keeps dumping and dumping and dumping, and you keep losing and losing and losing, okay? This is why you need to prevent blow-ups, okay? You need to prevent tilt. Huge concept. Going on tilt in trading. Okay, you can also call this akin to revenge trading, but going on tilt will literally make or break you as a trader, okay? Can you be disciplined to take 1 to 3 trades a day, and if you are taking these 2 losses, can you not have that and can you be disciplined to not pull that trigger after you take a loss immediately, okay? The more you can prevent blowouts and tilts, the longer your trading career will survive. And and here, let me tell you something. Tilt is inevitable. I have tilts and blow-up periods. I had one pretty recently, actually. I will have them about once every 6 months to a year, okay? They're inevitable, they happen, but as you get more experienced, right, I don't think, in the future, hopefully I don't have them anymore, but just based on my personal experience, I will go on tilt 6 months to a year. It happens to every trader, right? But you got to understand this, bro. As a beginner trader, you're much more likely and you're much more prevalent to go on tilt because you don't have a proper understanding of this stuff, okay? So that's the gambler's fallacy in simple terms. Do not think that just because, something has happened in the past, it is going to happen, a different outcome is going to happen in the future, okay? Because remember, previous outcomes are independent of future outcomes. Like, for example, if you flip a coin, okay, it's 50% chance it gets heads, 50% chance it gets tails. We know this from the actual event, from the actual flip, right? But once you flip a coin, okay, does your chance of getting heads increase? No, it doesn't. It's still 50% chance you get heads, 50% chance you get tails, okay? So that's really it. If you can understand the law of large numbers and gambler's fallacy, you will literally put yourself up, 1,000 levels above everybody else, okay, in trying to become profitable. But let's take it a step back, okay? You have to critically think. People who are not critically thinking will not think to inform themselves about real trading and real concepts like these, okay? So you have to do your due diligence, you have to critically think, and you cannot be on autopilot when you are trying to trade and go on this journey, bro. Yo, this place 10 minutes away. Hey, y'all are gonna get the crumble cookie review right after this. 7-figure day trader eats crumble cookies. I really have nothing else to say. It was just gonna be a quick video, so I guess we'll no, fuck, I missed the exit, bro. You kidding me? Dude. Okay, no, we're straight. Hey, yo, no watch right now, but this shit clean, baby. We're here at the place to get some cookies. I should got a fucking tripod, bro. Not gonna lie to you, man. Bro, I thought this shit was fucking... I didn't think it was gonna be this packed, bro. Damn. These motherfuckers are... Shit. So I guess I'm gonna wait in this fucking line, and then I will, I guess, hit y'all up and talk to y'all after this to do a review. I'm too lazy to show my face, but hey, you know, they call me Kevin. They call me Kevin too, but yeah, bro. We got the crumble cookies, we got some tacos too, and yeah, I think I'm just gonna go fucking kill this shit, bro. Hope you all like the video. It should give you a lot of insight into trading profitably and how to stop being a fucking NPC. All right, and I'll see y'all later. Peace.